The image shows a post-closing trial balance for the partnership of Farley, Green, and Hall dated April 9, 2015. In this scenario, the partnership has discontinued business operations and is in the process of liquidating. The following is additional information that pertains to the liquidation of the partnership of Farley, Green, and Hall. Income and losses distribution. It is stated that Farley, Green, and Hall share income and losses in the ratio of 5:3 to 2. This means that Farley would receive 5/10, 50%, Green 3/10, 30%, and Hall 2/10, 20%. Sale of non-cash assets. The non-cash assets are sold in a single transaction for $72,000. Given the book value of the non-cash assets was $64,000, this sale resulted in a gain of $8,000. Payment of liabilities. All liabilities are to be paid at once. For presentation purposes, non-cash assets and liabilities are used as account titles instead of listing out each individual asset, contra-asset, and liability account. Let's work through the liquidation process step by step. Sale of non-cash assets. The non-cash assets are sold for $72,000. This is $8,000 more than their recorded book value on the trial balance, resulting in a gain. This gain of $8,000 needs to be distributed to the partners' capital accounts according to their profit and loss sharing ratio. Allocation of gain. Farley's share, 50% of $8,000 equals $4,000. Green's share, 30% of $8,000 equals $2,400. Hall's share, 20% of $8,000 equals $1,600. Payment of liabilities. The liabilities of $9,000 are paid off, which will reduce the cash account by this amount. Distribution of remaining cash. After the payment of liabilities, the remaining cash, which is $74,000, is distributed to the partners according to their capital balances as follows. Farley receives $26,000. Green receives $24,400. Hall receives $23,600. The table shows a comprehensive statement of partnership liquidation for the partnership of Farley, Green, and Hall. This statement summarizes the liquidation process that the partnership underwent in several steps. All accounts are settled to zero, as all the cash has been distributed, and there are no remaining assets or liabilities. Here is the accounting entry that records the sale of non-cash assets. Here is the journal entry for the division of gain among partners. Here is the accounting entry for the payment of liabilities. Here's the journal entry to record the distribution of cash to partners in the final step of the partnership liquidation process. After this entry, all partnership accounts should have a zero balance, signifying that all the assets have been distributed and the partnership is formally dissolved.